Hello and welcome to Crypto Weeklies. In this video, we are going to analyze GateToken and its ticker GT. None of the content is financial advice. Let's get started. Over the last 24 hours or so, the GateToken has rallied by about 6.5%. Over the last 7 days, slightly down by about 2.5%. Not too much of a positive activity over the last 30 days. Nonetheless, market cap still about 2 billion, volume at around 13 billion. In terms of tokenomics, there are some concerns. Only about 41% of the max supply is in circulation on the channel. Again, as a rule of thumb, anything above 60 to 65% circulating supply becomes more and more interesting in terms of market cap growth reflecting in price growth. By that I mean, if there is any growth in the market cap, the token holders who held that token stand to benefit from the market cap growth. Again, not financial advice, but if the tokenomics is skewed towards more and more token unlocks, the newer token releases kind of dilute the growth of market cap, and that does not get reflected in price. So this is the price chart over the last year. The market cap chart is completely different from the price chart. So you can see that the market cap has grown quite a bit, a series of higher highs and higher lows, and a slight plateau since about April 2025. Whereas the price chart has not factored in that kind of a growth. Price has essentially done a 2.5x from $7 to $17, whereas market cap, that is from August 2024, to today, whereas the market cap has grew from about 670 million to now a 3x at around 2 billion. So slight divergence between the price growth and the market cap growth. In terms of how to look for any token unlocks, this is the unlock schedule available over here. The bulk of the unlocks are scheduled to be over by about July 2030. That's where the max supply of about 300 million goes into the picture around that time period. That is almost 5 years from today. Coming to the machine learning based and regression based estimation of the risk levels and the estimated bull run target for GateToken, not financial advice. This is available on the website cryptoweeklies.com. This is the price color coded with respect to the risk levels. This is calculated using the polynomial regression based approach, where the fair value of the GateToken goes through a non-linear relationship with time. That is, during the bullish phases of the market cycle, the risks are amplified, and so is the fair value, whereas in the bearish phases, this model did provide a clear-cut accumulation zone between the June 2022 bottom till about November 2023 bear market of the crypto market, where similarly during the initial capitalization and early bull run of 2021, whenever the risk is in this plum colored or the shade of Dodger blue, that's where the DCA per this model makes the most amount of sense. Again, if you would like to be more conservative, anything less than 10% risk identified by this model helps identify if the token is in an accumulation phase or in the distribution phase. In terms of some of the lofty targets for Gate in the upcoming next half of the 2025, the post-halving year, the ceiling established by this 2 standard deviation regression based trend line is at around $100 at this point. There were 2 instances in this 2024 rally where the price went higher than the 2 standard deviation residual applied to the fair value. That is where the price kind of met an ultimate resistance and the price came crashing down from that point. Again, that model did identify some of the elevated price action when the risk levels are anything more than 0.3 to 0.5 is considered sufficiently risky per this model. Again, this time around, anything, in fact, in the next iteration could be the risk whenever it presents more than 20% to 50%. That's a topping signal per my interpretation of the model. Between 0.2 risk, that is when the price is between $44 and about $73. So roughly speaking, between $50 and $75. That's the estimation per the regression based analysis of GateToken. In terms of the simple moving average or 20-week simple moving average based interpretation of the risk levels. Again, right now risks are fairly low, only 1% from this interpretation of this 20-week simple moving average based model. In terms of the technicals, again, as evident from the 20-week simple moving average, this is the 20-week simple moving average in this red line coming at around $21. The prices are lower than the 20-week simple moving average. They haven't been much lower than 20-week simple moving average essentially since October 2023. This is the first time prices have come down from that level. That is coincides with a low risk time in the asset accumulation phase of GateToken. Again, you can see over here, if the hypothesis was to accumulate when the risk is less than 20% or when less than 10%. This is first time since 2022 June the model predicts that it's in a low risk territory. Again, not financial advice. In terms of where it could potentially go, the intermediate risk levels, again, between 0.3 risk to about 0.6 risk. Those are some of the key areas to look for in terms of the simple moving average based model. You can see whenever the prices enter between that 0.3 to 0.6 risk, again, there is identifying the actual peak to the dot is very hard. So instead of that, a range where the token is quote unquote high risk or in distribution phase makes most amount of sense. You can be as conservative or as optimistic as possible with this model. But again, personally speaking, you can either, again, what I've found is either toggle on this 0.3 to 0.4 risk level or kind of avoid it altogether. So one with 0.3 to 0.6, the price forecast is between $25 to about $29 with this regression based estimation. That is about, from the current price, about a 2x. The lower end being at $25, so the higher end slightly under 2x at around $30 or so. That's the 20-week simple moving average based estimation for GateToken, which is again fairly muted compared to the $50 to $75 interpretation per the regression model. Overall speaking, the time weighted average price also helps identify if the token is in an accumulation or distribution phase. Again, in 2022 June, this model identified the lowest risk possible when the price came really close to the time weighted average price. This blue line, which identifies what is the price at which the asset could kind of potentially digest the bear market lows or any potential in terms of weekly price action or daily price action below this time weighted average price, helps identify accumulation entry point. Again, this model did that in late December, early January of 2023. Right now, per this model, the risks are elevated at around 0.7, that is at almost 60-70% risk. All in all, the estimated bull run target for GateToken as a confluence of the three models that we discussed, the simple moving average or the 20-week simple moving average based interpretation, the regression based model, and the time weighted average price model, point to this is the accumulation or the estimated bull run target based on the risk reward analysis. Regression risk is fairly low, simple moving average price risk is low, but the time weighted average price risk is at around 70%, weighted risk is at around 20%. The estimated bull run peak is closer to that $75 target, which is confluent with the regression based model as well. That is about a 4.5x reward from the current price of about $16. And with that, I'd like to conclude the video by saying, again, none of the content financial advice. One more time, wanted to reiterate that and come up with a interpretation of this model between lower end between $30 in the short term, mid-term $50, and in the outlandish or stretch goal is at around $75 for Gate. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.